It promises to be a very busy F&O show for sure, I can assure you that, even though the start seems to be fairly muted for our markets. However, lots to talk about fundamentally from this market's perspective. Let's get in a fundamental voice. Amit Jeswani should be joining us any moments from now. You heard him at the Alpha Ideas 2020 meet speak about one particular area, and that is Edelweiss, but it just showed how select people understand businesses and try and invest in them. And I think that's what we'll try to do today, talk about with what happened in the quarter gone by. But we have a fundamental guest with us, Amit Jeswani. Needs no introduction, really joins us on the show. Amit, good having you. Thanks so much for taking the time out. You know, love talking about businesses, looking at the numbers and some fantastic results by select band of companies. Let's start off with the big boy, Tata Steel. Did you have a chance to look at the numbers and what did you make of them?
So Neeraj, good morning. Thank you for having me on your show. I've not looked at Tata Steel's numbers, too big for me to understand, but overall the steel cycle remains very strong, but you don't want to be in low quality this year, so cyclical names will underperform. But if you have like a 3-year, 4-year horizon, I believe steel cycle is going to be super positive. The prices, so if someone's seen Game of Thrones, the guy keeps saying that winter is coming. So this winter onwards, after November, you'll see a huge sprint in stock price in the prices of steel, and it crossed 52,000 again. That see the prices like went from 36,000 last June to about 52,000 in March. From 52,000, the prices have now corrected of steel prices to about 46,000 broadly. Now, when the winter comes, China shutdowns capacity and the prices will move up again. The steel cycle is here to stay for the next 3 years. Big money can be created here, but I don't track Tata Steel, but overall the cycle looks super strong. The capacity utilization of the sector has reached 82%. To make 1 million ton of steel, you need 7,000 crore rupees. Banks are not going to lend you any money. That is something which I can with conviction say to most companies. So no new capacity will come, but demand will keep growing at 7-8%. Import will not happen because India has put anti-dumping duties, plus China itself has cut down capacity from 1100 million ton to 800 million ton. So China doesn't have excess capacity to export to you. So steel cycle will be super strong. A lot of money will be created here in the next 3 years. I don't track Tata Steel, but I like the leaders of every sector. JSW Steel is the leader here, but overall the sector should do good.
Amit, good morning. Devina here. What is the call on the index now? I mean, looking at the way we've been moving, obviously jitters across the globe weighing down on us as well, collateral damage for us, but still, are we holding strong according to you?
Okay, so good morning, Devina. The first thing is that rupee has now given a breakout. Okay, this is a 5-year breakout above the 69 level. Normally, whenever a large range shift happens, if a stock or any company or any currency breaks out after 5 years, you will see the impact at least for the next 5 months. That is just normal behavior. So the next few months, I expect the currency to move north. How we placed on the index, if you see what we have been buying, see the leaders, the market tells you where you should be. Large caps were the ones who fell the least, and they were the first ones to make a new high, right? So technically, if you're speaking, like large caps is the place to be this year. We still believe that there is more room to go, but see, there are two kinds of portfolios. Like within our portfolio, there are two kinds of bet, and this is a very interesting thing. There are two kinds of portfolio inside our portfolio. One portfolio is where we bet with high conviction of reasonable returns. These are normally companies which grow at 20%, secular growth companies. So that is the core part of the portfolio. That is 50-60% part of the portfolio. The second companies are companies where with reasonable conviction we can expect very high returns. So that is basically where the alpha comes for us, and these are these 30, 40, 50% kind of growing companies. So so this year we have been tilted more towards our core rather than taking on alpha bets, because there is uncertainty around the globe, in India, political uncertainty. So this, and we've also not cheap on valuation. So this year it's better we relax. No big deal. We were the first ones who turned negative this year, but we're not as negative now as we were, like say in January or February. But this year you have to protect your capital. That should be priority number one. Returns will come. 2019 onwards, we expect huge rallies to come in the markets. But you have to be sector specific. That's important. And yes, so sectors will look at sector tailwinds, and that's where big money will be made.
But equities for us, if we stay at these current levels on the currency as well and what's been happening globally, you think there will be a flight of money to safer haven assets, and there you will see actually cuts coming into total allocations as well to equity?
See, actually, we're always invested in the market. So we actually look at tailwinds. Where are tailwinds? And that's where we invest. It is very difficult to predict macro. There are only two things we understand. So this is one place we cannot understand Turkish economy. We know that we don't know. A lot of people will start analyzing Turkey and all those things, but those things don't matter because China has also devalued its currency. There are only two things any retail investor or HNI investor should look, because these are the only two things which have very high correlation with your flow of funds. One is how is rupee doing, and the second is how is emerging market index doing. If you can understand these two things, you will understand the liquidity part. So on the liquidity part, the emerging market index has given a breakdown below the levels of 45, that is MSCI emerging market index, and even the rupee has given a breakdown in sorts. So basically the flow of funds will be weak for the next few months, I should say. So on that we're not so positive, but see, we have to look at sectors, look at the numbers which are coming. They're just mind-blowing. Like this quarter is like a Lollapalooza quarter. I have rarely seen a quarter as strong as this one in the last 5-6 years. Except for like 3-4 companies out of 100 companies I track who have not performed well. The numbers look fantastic this quarter, and new trends are going to be created. There will be new sector leaders, and I am expecting good wealth creation in the next few months, years to come.
Amit, do you track the specialty chemical space? Vinati, fabulous numbers. Last evening, Fine Organics came out with a splendid set of numbers. Any stock that works for you here? And the reasons thereof, of course.
Neeraj, yes. So we've started tracking the specialty chemical space. We own one stock who's the market leader, who's got 70% market share in rubber chemicals. That is Nosil. But we've been holding this for the last 2 years in our model portfolio. We have some 7% weight there. But except that, I am very happy. See, actually, I'm going to give out my thesis here. The thesis is very strong for chemical companies in India. If you just look at one company here, Aarti Industries. Okay, Aarti Industries. So everyone knows there are problems in China, and we had just conducted a one-on-one meet with one of the largest importers for chemicals in India. So when I asked him what's happening, and he's the guy who's the biggest supplier to Bodhal and Aarti Industry and the kind. One thing which is very sure, the chemical 2.0 is coming. The crises have gone in China look as bad as they were before. And you will see a lot of, now let's take an example of Aarti Industry. First of all, there are more than 5-6 CEOs of Chinese company in India now, as we speak, looking to partner with or looking to invest in a factory in India, because they need to hedge their supply chain commitments that they have done. Thing number one, look at Aarti Industry. Just open any investor presentation and ask everyone to do this. We don't own Aarti Industry, but this is just for purposes of discussion. The thing in chemical, why were chemical companies not ever getting valuation? The reason chemical companies would never get valuation, because you could not predict. Okay, chemical business works on spreads, basically. Let's say the raw material spread and the finished goods spread, and that was the problem. And low ROC, because the fixed cost investment was very high in chemical sector. Now what is happening? Let's take an example of Aarti. Okay, he signed 2 contracts. One in the last contract was a 4,000 crore contract for 10 years. The Chinese company has given Aarti Aarti Industry money to invest in plant, and Aarti Industry has got guaranteed revenues for the next 10 years. So basically it becomes a high ROC business. Yes. So it becomes a very high, because you are giving, the customer gives you money, and basically you're making money from his money. It becomes a very predictable business.
So you see this happening?
I'm liking the chemical space a lot. There are a lot of players actually.
Okay, that's what I was asking you. You see this happening across the space, and therefore is no-sill another kind of that idea? I mean, you would believe no-sill is a good investment even at the current levels, Amit?
Absolutely, absolutely. The company looks good. So look at the margins. See, companies, there's a regime change. These companies used to do margins of 12, 13, 14%. Look at no-sill's margin, somewhere around 28, 29%. March quarter was 31%. So basically, this is the new normal. Markets will take time to recognize, a few more quarters of consistent performance, and people will say, okay, the 30% is the new normal, and we should 28, 30% margin is the new normal, and the stock should get valued at those levels. See, there are rarely any companies who can make 30% operating margins. This is not a commodity anymore.
All right. Watch out for those stocks there. 12-month gains on no-sill of 31%, but over the last 6 months, not done a whole lot. It's dipped by about 12-odd%.
Amit, I've got to stay on, so much more to talk about. Amit, a lot of numbers that have come out over the last couple of days. What have you made of the liquor numbers? United Breweries, the numbers seemed okay. Gross margins at least seemed to be okay. The stock rallied quite a bit on what was reportedly just an ordinary quarter. Som Distilleries has come out with numbers, and the numbers don't look all that great. What have you made of these liquor companies? Would you have an investment call on any of these?
So Neeraj, we don't own any liquor companies in our portfolios currently, but the space is good. If you see globally, they have created a lot of wealth. So it's a proven business model. Globally though, you don't have so much government interference. Some distilleries I do track, but it's a very not so good set of numbers, I would say. I'm very disappointed, because this was one stock which I was looking at it closely. It fit all my criteria: high growth, new product. They are market leaders in the niche, 45% market share of Hunter beer in Madhya Pradesh. Basically, you're better than Kingfisher in a state, so you are doing something good. So it was something which was a very exciting story, but clearly they've not done as they've guided. So yeah, so that's that. But I don't have very strong coverage. Radico is also good. United Spirits also good, but. Yeah, so Radico was basically that molasses trade, but Som is not a molasses trade, because in beer you don't need molasses. But let's see what happens. But I'm not have very close tracking this thing on this. But Som I do like for long term at a very big dip.
If you see Neeraj yesterday's move on United Breweries, it is just broken above that overbought region after yesterday's big move. And if you see, if there is a candlestick that you can see, it's a big long body. Opening was lower, closing, and it closed near the highs of the day. So big volumes, higher price momentum, 7.5% plus on the stock, and as you can see, a big spike there. Body of the candlestick also longer, which indicates that this was led by volumes, and the RSI there has broken to 70.3. The RSI signal comes in at 70. Last time we breached this was in the month of November last year. So this is a positive indicator for United Breweries.
No, let's wait and watch what happens there. 7.5% up for UB in the session yesterday. Let's see if that lasts or no. Some numbers that came out yesterday, and I think 2 or 3 good names out there. Amit, do you track companies like Apex Frozen? The numbers optically seem to be okay. It's in a niche space of its own, so to say.
Yeah, we had positions in Avanti Feed actually. We didn't track Apex so closely, but there's a 3x expansion here. So all these things don't matter. The most important thing is that the expansion, which is the key here. But we don't have any close watch on the prawn story anymore. See, the tailwinds which were there are not as strong. I'll just give me 1 minute and explain you this. In Thailand had 15% market share in prawns. because of one disease, the market share became 6%. Vietnam had 14% market share in these shrimps, and because of one disease in 2013, the market share became 7%. So basically, this is a lot more volatile than people actually think. But yes, so we don't have positions anymore. We've exited Avanti Feeds and the whole lot. But yes, we've been tracking, but not so closely. But the trade in Apex is 3x expansion capacity.
So what results have impressed you, Amit, in this quarter gone by? Now we are at the fag end, except for one Sun and a few other tiny tunes. Almost everything has come out. What's that one number that stood out for you this earnings season?
I'll tell you one full theme which is working very well, and that is the lending theme. Look at the numbers. AU Small Finance Bank, 61% growth. And see, where's the largest tailwind? AU Small Finance Bank, 61% growth in AUM. Yesterday, as Saloni rightly said, DHFL, mind-blowing set of numbers by DHFL. PNB Housing Finance, 50% growth. So the entire NBFC pack, so basically everyone was expecting, so retail credit is just getting started. That is one place. You look at from microfinance companies to SME lending companies. These guys are just getting started. The lending theme is the one which is like the most impressive, because we were all expecting 30%, but these guys are coming up with 50-60%. So they're beating the highest estimates. So that is one place where I believe, like, look at DHFL yesterday. This is a housing finance, a slowdown in the housing finance space, and DHFL is growing at 35%, right? But when the real affordable housing boom comes, which is expected in the next 1-2 years, you know, what would be the growth rate? So a good longevity theme. All these stocks look good. We have positions in DHFL, so just a disclosure here.
Just want to mention out here that if you log on to the website bloombergquint.com, and there is a tab for Alpha Ideas 2020, out in that presentation, Amit Jeswani has made a very nice presentation on Edelweiss that forms a part of the lending theme, no longer just a brokerage theme, but a lending theme at large for Edelweiss. And he explains his rationale as to why it might be worthwhile to have a look at investing in companies in this space, particularly Edelweiss. So do log on to the website. There's a tab for Alpha Ideas 2020. You can go in on the tab and see numerous presentations, but the lending theme that we were just talking about, Amit has made a presentation out there on Edelweiss. So this is the tab you need to go on to bloombergquint.com.
Well, Edelweiss is not surprised on the earnings run. Also 29 straight quarters of profit for the company. I mean, but somehow on the day of the results, you know, always due to already pre-anticipated and pre-built in, you know, good numbers, the stock doesn't do well. So it kind of takes some profit off the table for people who've already taken trades in Edelweiss. But Gaurav, on the stock?
Well, if you look at Edelweiss, it has been trading in a range. It had given a breakout sort of above the levels of 310, 315. Right now, it's trading in the support area. There's a band, there's a support that we can expect at the current market price. I would wait for some time. As you rightly mentioned, it's seen some amount of profit booking already at the levels of 280, 285. I would not be too keen. If somebody wants to buy above the levels of 295, in which case you will see a strong short-term base formation happening at levels of 275, 280, and a degree of confidence would also increase, and it can head towards the level of 320, 325. There's a strong breakout in the making above levels of 325. One can buy about 295, have a stop of 280 on the upside, targets of 315, 320 can be seen.
I just want to come to you, Amit, on the banking space as a whole, post numbers and results. I mean, looking at valuations as well. According to Bloomberg analysts, potential upside in the likes of Yes Bank, ICICI Bank and Bank of Baroda. Their price to book is also not that expensive, with the Yes Bank at 2.8, ICICI I think is at 1.8 times, and Bank of Baroda is at 0.9 times. Do you think these are good enough to make an entry point?
So I like retail lending a lot more. So I would stick with the IndusInd Bank. See, there's a big opportunity in corporate lending as well, which is built up. But I like the IndusInds, Kotaks. I still like them. These are the guys which will keep giving you 20% return year over year over year. There's a large opportunity. PSU banks. See, when you bet on a bank, your bet is always on the banker. So PSU banks have no banker only. Every 2-3 years you'll have a new banker. So we've not been tracking only that space, to be honest, anymore. So that is one space I'm super convinced that I don't have to track that space. But there'll be odd years where they go up 50, 70%, but you need consistency. You know, the stress adjusted return in these companies are not worth it. So you can't take large concentrated positions. We normally have a 10, 15 stock portfolio. So we don't buy these companies, PSU banks.
Yeah, so Yes Bank
Yes Bank, yes. Yes Bank is a very super story.
Yeah, so
Yes
Bank
absolutely.
has...
So Yes Bank, just one more point I want to make. Yes Bank, if you believe that if the numbers are true, this guy is a legend. Okay, that is the only point I want to make, because you cannot see, think about it, when your entire sector, like SBI has 20% NPAs on its corporate book, 13% NPA ICICI Bank has on its corporate book, 9% NPA Axis Bank has it on its corporate book. There is not even one company which has less than 6-7% NPA on its corporate book. But on one side you have Yes Bank, who says I have NPAs of 1.20%. So I don't know, it's too good to be true, so that's why I'm not there. So that's the only reason.
To stop you there,
like, if you look,
we've got
just
market pre.
Okay, Amit, I want to come back to the point that you were making. Did I summarize? Am I summarizing it correctly when I'm saying that you would look at Yes Bank closely, may not invest in it, but if the numbers are to be believed, then Yes Bank is a prime investment candidate?
Absolutely. It's a no-brainer. You know, the corporate banking space, you become a vulture right now. So you are the ones who has the pricing power. The guy who's sitting like in your customer has no choice but to go with you or any NBFC who can do corporate lending well. So Piramal is doing very well. That's one place where I trust the numbers.
You would go out and initiate some investments into Piramal. There's another reason too. There was a report recently, which the company of course has shaken off, but the report of the demerger, the much spoken about demerger that could finally happen, that is also, to be honest, a technical trigger.
Absolutely. So we own Piramal for the last 1.5-2 years also. So we don't miss out these growth stocks. This company is growing at 40-50%, super high quality management. See, what do you want? This company had a return on equity of more than 25%, high quality management. This company is minority shareholder friendly. They will demerge. So these are the kind of bets we take, you know, growth, ROC, ROEs, good management, yes. So in real estate, I'll just tell you one interesting thing, Neeraj, since we are speaking about Piramal. A lot of people, including me, had worries about what will happen to the real estate book. So they have lended basically to 1.3% of the real estate builders in the country, but they in aggregate, those 1% builders do about 8-9% of real estate sales. It's a clear show that the trend is clearly shifting from unorganized to organized in the real estate side, and that's going to be a big super trade, not today but a few years from today. The organized to unorganized in real estate will be a very, very, very large trend. But yes,
To track the oil marketing basket and post the results coming out from there, do you see any more interest? I mean, the likes of an HPCL, they are on the right track. They want to capitalize on growth potentials. You're seeing a lot of interest building up in the lubricants business across Asia, West Asia and Africa for them. So are these the right tick marks for these companies?
I'm so sorry, I don't track any, rarely do we track government companies. We bet on entrepreneurs. So entrepreneurs make money. Government, their interest is not to make a lot of money for you. I don't think so.
Well, that should be interesting though, what the likes of HPCL, etc. do. But I think the answer there could well be, let's see what crude does, because hitherto they have shown that while we were talking about the resilience of the aviation and the OMC space to crude price uptakes, the last couple of months have shown that the resilience is, well, maybe not as strong as people or bulls would like them to be, and the correction has been rather steep. But it's a good point to take up with you, Gaurav Bisa. From a trade perspective, OMCs which have looked slightly wobbly yesterday, would you go out and initiate a fresh trade on any of those?
As far as buying is concerned, I would not be too interested. Likes of HPCL are just about trading in the support area. Any trade below 274 would be a decent sell to play for targets of 265. Have a stop loss of 278, 279. But buying, I think, for HPCL, as long as it's trading below 300, one should be avoiding HPCL on the long side. A lot of writing that we're seeing in 300 call option, and that's not been just a day or 2 day trade. That has been trend for last 2 or 3 months that we have seen a lot of writing happening, a lot of reversals happening from 300 marks. So I would wait for that time. BBC, I don't see too much of trade, but as for HPCL, one can sell below 274. We can see some more pressure coming up.
Amit, are you watching what's happening with Jet Airways? You have news every day coming out with management talking about how there are a lot of speculative reports on what exactly the management is doing to tackle the crisis that the company is facing. The stock has declined since last December. It started this selling route. Now it's down to 283. Amit?
See, Jet will, I'm not so sure. See, we bet, hello?
Yeah,
Hello?
yeah, go ahead.
Hello? Yeah. So we bet on market leaders. So not that we have positions in Indigo also, but that is one place we like a lot. So the day they can sort out their Airbus problems, see, wherever there are market share gains, that's where big wealth will be created. Indigo doesn't need capital to grow. So that is one. If you see Indigo's ROCs, it's like if you see the core ROC of Indigo, it's more than 100%. So that's one business we like, but we don't have any positions in aviation sector. But one person problems is another person's advantage. So I think out of the Jet route, the bigger beneficiary would be Indigo, and that's a market leader, 41% market share. 1 year back it was 38%, 2 years back it was 33%, 4 years back it was like 5 years back it was 25%. So basically there's a clear shift happening to the lowest cost airline guy, and that's been always the case. Southwest won over everyone else because it was the lowest cost airline guy. So the cost is very important. Jet is way too high, the costing. If you look at any parameters, Jet is more expensive. The fleets are older for Jet. So Indigo is a better bet if you really want to bet on aviation, but this sector has its own problems, and so you have to be a little careful.
Amit, before we thank you, if you are at a liberty to speak about the latest addition to your portfolios with an assumption that you guys have already completed your purchase. Again, I repeat, if you are at a liberty to speak about it.
Focus on financials. That's all I can say. That focus on financials. That's where big money can be made. Yeah. So that's going to be the leader of this bull market. That is something I'm very sure about. And consumers.